everybody.
Sean and Kelly here, Price and Price Group of Sampson Properties, and what are we about to talk about?
The Market Snapshot.
Yay! What's happened in the Northern Virginia real estate market in the last 7 days and under, hopefully,
Let's
5
go
minutes.
under 3 minutes today.
Under
We've
3.
got this. This is everything that has happened in the Northern Virginia market in the last 7 days. That's right, ladies and gentlemen.
And what the
It's
contracts
updated,
and what the contracts
are
looking
like.
All right, here we go. Let's go. All right. Okay, so we're about to dive into the stats. We are going to get straight to it because we are.
Because you gotta go. You gotta have an appointment.
That's right. All right, ready? Go.
Okay, that black squiggly line you see right there, that is the buyer's activity. That's how many homes have gone under contract in the last 7 days. The teal line, that is the seller's activity. That's how many homes have newly listed on the market in the last, been newly listed on the market in the last 7 days.
That's right. In other words, the black line is the demand and the teal line is the supply. And you can see that we had a spike in both last 2 weeks ago, and that was coming back off of Easter break and coming off of spring break for Fairfax County. Last week it evened out a little bit, so we had a slight increase, like maybe a 2% increase in buyer activity, and we had a decrease in inventory. So that gap between the two actually opened up more, which means that if you go down here to the seller's market versus buyer's market, this graph means.
Okay, so the center line, that's your normal market, completely even, okay? Anything above that center line is a seller's market. That means there are fewer homes on the market and more buyers, so there's more competition out there. Below that center line, that's a buyer's market. That means there's way more inventory than we're used to, than we've seen in a very, very long time, and a lot more
Flexibility and buyer.
more homes, fewer buyers.
Yes, yeah, that's right. Okay, so what happened in the last 7 days? Because this gap increased, we actually moved up into a little bit of a stronger seller's market. So what we're actually seeing in the market does match this, but let's look at what the contracts look like. This is the largest number that we've had as a sampling from Cardinal Title Group. We had 277 contracts, which is beautiful. It's a lot of activity. So we're going to focus here on Maryland. Hey, they added in, or Virginia, they added Pennsylvania.
They did add Pennsylvania. 100%. What? Higher than list? What the cuss is going on?
They must have had one sample.
But look, everything is, maybe it's just a filler right now. I don't think that's real numbers.
Could be, yeah.
Ignore Pennsylvania for the time being.
So in Virginia, we had
a storm.
Oh, it does. It's beautiful.
Beautiful.
Squirrel. Contract price, we had 38% go above contract asking price, and 35% went at asking price. So that's 73% that went at or above asking price, and we had 75% that went in 22 days or under. So again, that 22-day mark is a sweet spot. Sellers, if you're pricing it too high and you get beyond that 22 days, you're going to start getting lowball offers. Buyers, just because a property's been on the market and has made it through the first weekend does not mean the sellers are going to be ready to give you a discount. So have your agent run the comps, see what the actual value of the property is, see if it is overpriced, and come up with your strategy appropriately. But if it's priced right, don't try to undercut in that first 3 weeks, because it's not going to work. And you're going to be missing the property. As they say,
the difference in the buyers that are willing to shop and like really want it and they pay for it and they go to Michael Stars and they put all this money out, right? And then it's past season and everything else, and the people who don't go to Michael Stars, instead they go to what our daughters call the mom store, like TJ Maxx and Marshalls, because I go there a lot.
Yeah, I don't even know.
You're going to see Michael Stars there, but like for a quarter of the price.
Yeah.
That's that 35%.
Yeah.
And then,
that's good example. What's Michael Stars?
Oh, it's just a brand.
Okay. Yeah, good example.
I love you. I love that about you. I can wear anything.
Financing versus cash. A lot of cash buyers think, even in a competitive market, that if they pay cash, they have an advantage and they can come in lower. The fact of the matter is that finance money is just as good and spends just as well as cash money. It does give you an opportunity to waive some concessions, but a lot of cash buyers still want their appraisal, which gets away from any value for it. So cash buyers, you just need to be aware that if it's still in a competitive phase, you've got to pay retail or above. Next, we'll talk about the contingencies. Virginia, still sitting about 3/4 with getting the finance contingency and the appraisal contingency, so that's beautiful. And buyers can still protect themselves.
I like
yeah,
that
me too. As far as inspection contingency, still about 65%, 64 got their inspection contingency, and these other 34, is that right?
I would
36?
say it was pre-offer. I still say it's pre-offer.
Yeah, so I would say that buyers, even though it's competitive, buyers are actually protected in this market. versus markets of the past when we were in this high activity markets. Sellers, this is an important number for you. 99% of these 277 contracts had the seller offering compensation toward the buyer's agent. If you are a seller and you're dead set against offering and contributing to that compensation, you're going to turn buyers away because that's an extra expense that they're having to come up with.
Yeah.
So
they'll offer that much less on your property
Yeah.
because the money has to come from somewhere.
and that's even if they can't offer it, because let's say that they have to pay an extra $30,000 to their agent. We're using $1 million property for example. Let's say they have to pay an extra $30,000 to their agent. Well, they can't offer you $970,000 because they still have to pay that $30,000 out of cash. That's
Right.
money out of pocket because
Yeah.
they're not able to put it in a
They
loan.
go to your
They gotta go to
neighbor
the
for
neighbor.
$1 million and they're willing to pay at least some of the buyer
Yeah.
broker commission,
Yeah.
and then your neighbor is hosting you at their congratulations, we have sold our house party. What are you gonna take?
How does that feel? Anyway, so all right, so sellers,
Be like,
you
I'm
just
sick that day.
You have to be ready for that. All right, guys, if y'all have any questions or if you would like to talk about your situation, if you're considering entering the market as a buyer or a seller, strategy is really, really important right now. So reach out to us, 703. She's got two numbers to her.
783-2143.
All right, guys, we'll see y'all next week.
Bye.